Hello everyone, hi, welcome to the channel of Wall Street Mojo. Friends, today we're going to learn a concept which is known as the liquid assets. Liquid assets are the most important thing in any company because liquidity is what every company craves for. For any business to be successful, then there needs to be two rules that needs to be always followed. The first rule is that never run out of cash. Rule number two is there are three rules actually. Never run out of cash. And rule number three says don't forget rule number two and rule number three. So that means there is a high level of importance that is given to cash or liquidity. Right? Never run out of cash to be successful. What we are looking over here is an extract taken from the Colgate-Palmolive company, cash and cash equivalents and receivables data here. Now, we are going to understand what are the liquid assets. What are the liquid assets? So, liquid assets are the assets that can be transformed into cash rapidly with a negligible effect on the price available in the entire market. And if you see, such assets are like government bonds or money market security, government bonds or money market MMS, that is, or the money market security, what we say. The foreign currency market is believed to be globally the highest liquid market across the world, since a huge amount of money is being exchanged every day, and thus making extremely difficult for the person to affect the worldwide exchange rate. Well, I'm gonna display some of the list of liquid assets. See, saving account, and cash, they are believed to be the greatest usual form of the highly liquidity, being owned by either individuals or by the businessmen or both. However, there are several other assets that are believed to be more liquid and easily capable of being shifted among the owners. And such assets are like well established all through the market. The complete list of the liquid assets over here, I'll show you. Cash in hand, we have cash in bank, then we have cash equivalents, we call it CE. Then we have something called as accrued income. We have promissory note. Promissory note is the next thing. We have, previously discussed government bonds, stocks, marketable securities. Then we have CD, that is certificate of deposits, and any tax refunds, the TRs. So this were the list of liquid assets. Now I'll give you an example of liquid asset. See, stock market is believed to be the perfect example of any liquid market, as there exist a huge number of sellers and buyers coupled with several other stocks being example of liquid assets. Now, considering such assets significant trading volume, you see some equitable securities might fast be transformed into cash, and such type of cases particularly exists for stocks having significant share volume and huge market capitalization. Now, since securities, our example is basically shares here, since securities can quickly be converted or be sold through the electronic markets, nowadays we have a demat form, dematerialization form, at complex market prices when in demand and equitable stocks under correct circumstances are liquid. The second that we are going to discuss in our example is the cash on hand. The cash on hand is taken as the liquid asset since its capability of being quickly accessed. Now, since cash is being considered as a legal tender, any firm may utilize to resolve its existing liabilities. Assume some company or a person has some cash in savings or checking accounts, right? The account's money is believed to be liquid since it can be taken out simply for setting liabilities. The third example that we are going to discuss here is going to be liquid assets. So example number third, investment is the next example. Investments are expected to be liquid as they can simply be liquidated. For instance, we have the mutual funds, money market funds, MMF, We have bonds into picture. Any stocks, shares are believed to be liquid, and such assets can be readily be converted into cash whenever any financial emergency situation arises. Usually, investments can simply be sold depending upon the investments. Now, let's understand the difference between the current assets versus the liquid assets. Current assets versus the liquid assets. Current assets are like, inventories, prepaid expenses, right? We have debtors, cash in hand, we have cash at bank. Next is your CE, that is your cash equivalents, the marketable securities, right? So these are the example of the current assets. These are the example of current assets. Then we have the examples of liquid assets. We can just simply copy over here, right? So the above figure basically shows the difference between the current assets and the liquid assets. The list of the liquid assets comprises is what we hear. So basically these are all the list of current assets and the liquid assets, right? We have something that is known as the consolidated liquid assets. Now, consolidated liquid assets are the security and cash that can be readily be converted into cash, less any current liabilities. And consolidated liquidity assets formula is something like this. The consolidated liquid assets is equal to your marketable securities. I'll just delete this two row. The marketable securities, you need to add cash in that, and add cash, deduct any current liabilities. Like for example, let's consider Ford Motors Inc. It has 2 million in cash. How much? 2 million. Everything is a million, so I'm not writing dollar in that. In cash, as depicted, in the balance sheet of them. 6 lakh is standing in the marketable securities, 6 lakh dollars, and well as 4 million is in the current liabilities. Right. So employing the above mentioned formula, the Ford Motors Inc., it would be something like this. The marketable securities, okay, that's 6 lakh plus you need to add cash minus the current liability. So that gives us 4 lakh, right? It's 2 lakh plus 6 lakh minus 4 lakh, right? Standing at final at 4 lakh. So in the above example, Ford Motor Inc. closely, I'm sorry. This is 4 million. And this is 2 lakh actually. Let me change the number over here. 2 lakh, 6 lakh, and this is 4 million. Yeah. So it goes negative. So here there is a negative liquidity, which signifies, if the company is asked to pay off all its current liabilities, Ford Motors won't be able to perform such a task. So on a concluding note, overall the liquid assets are the at most important to any individual or a company, as it becomes extremely handy while making emergency debt repayments, purchasing equipments, hiring labor, payment of taxes, and several others. So therefore, any company or individual willing to start a business or invest strategically needs, you can so-called call as the immediate cash, which is only possible if the entity has readily available cash or such securities that would fetch cash upon easy liquidation. Thank you everyone for joining the session. Cheers.